Hello everyone, this is Sam Wong again. Today is February the 10th. I hope all of you doing good. As someone start, recommended give a fantastic return in the last few days. I hope you have profit taken. The market after sleep for days been rebound solidly last trading day of last Friday. Dow Jones, as you can see on this, reached over 50,000 mark and 5-year high. The recently being done chip makers, software companies, and AI infrastructure stocks, except Amazon, surged on Friday on deep buy as they recover some of the week's sharp losses. Stock index added to their gains on Friday after University of Michigan U.S. February Consumer Sentiment Index unexpectedly rose to 6-month high. Goldman Sachs, who carried the heaviest weight, was up 4%, while Caterpillar rose by 7%. Apple, Microsoft also went up while Amazon was down. Other indexes also rebound up, along with Bitcoin, gold, silver showed the right directions. As previously discussed, the market ran down and tested another high was very healthy. The earnings season continued with good year. Zoom Info announced earnings with Coca-Cola, BP, Marriott also announced earnings today, and McDonald's tomorrow, and many others line up. Earnings have been a positive factor for stock with 79% of the 293 S&P 500 company that report beating expectations. And same graph showing you that, which is the index have went up as well, but then in a month you can see that it was coming back down to have a rebound. So this is very interesting to showing you that how solid things are, that they're coming back down and really reaching another high. So one thing about robots, which is a stock that have been gone down, from a 52-week high, $150, and I have talking about it for those of you who have been, following me. So it closed up more than 9% after reporting fourth quarter booking of $2.22 billion, better than the consensus of $2.09 billion, and forecasting full year booking of $8.28 billion to $8.55 billion, stronger than the consensus of $8.05 billion. So this is why you see the stock gone back up a lot last couple of days. But I mean, obviously, compared to where I bought it, which is about $90, which actually, when you kept down to $80, I bought more again. So I'm still at a loss at this point on robots. But looking at the graph and the momentum, it was healthy again. It was still because of the lawsuit that's really impacting the stock heavily. We'll see how it happens. Maybe you will get settled soon, or just some more positive news about that. The other stock I always talk about is Helium. So Helium earning call scheduled on February 24, where executive will discuss the financial result and outlook. Helium beat the earning last quarter with lower losses. The next Helium, and I'm still looking for this stock going to be doing pretty good job. And actually, if you look at 1 month, it has a few V-shape and volatility on this stock. So this stock actually may gone down around $2 in the next couple of days. But then based on the historical technical analysis, you probably will rebound to $2.40, hopefully, if the next V-shape rebounding, which is probably closer to earnings on the 24th. So there's still opportunity in the next 2 weeks that this stock will actually reach back to 52-week high. From a technical standpoint, obviously, I can tell you if they're going to have a really good earning, which is minimizing the losses and beat Wall Street expectations. The other one is, once you look at it, is Alibaba. They have been actually doing pretty good and have rebound. So the stock actually, you can see that there's some V-shaped pattern. And the next move, which is Chinese New Year again, is coming on 2017, which is only a few days away. So you never know that. I'm looking forward to stock probably come back to $175. When this V-shape formed and then actually continue to go up. So I'm talking 175 would be probably, closer to where it was last time, 178 when we reported about Alibaba. So you maybe is a good exiting point because it's kind of disappointing that I look at this, it should hit $200, which is 10% upstream. But if you think about this stuff, $175, which have 5% upstream in a week, which is actually pretty good as well. So other one that was kind of disappointing for my portfolio, and as of now, and I continue to buy more and more, is the Microsoft. Again, the Copilot was something I have been using at work every day. It was very amazing, but actually in the earnings and Wall Street was, and the people analyzing the stock basically say Copilot is not something that Microsoft would making money right now, and they should be focused on something else, which is actually driving the return higher. So we will see how it goes. And just like Meta, I mean, Meta last quarter earning announcement was terrible and talk about too much AI infrastructure costs and so on. Well, then the quarter is announced earning. It was really astonishing, maybe surprising to the Wall Street and the market. It actually gone up very significantly the day after announcement to $738. Obviously, now it slipped back below $700 again, but it's a very solid upward string, and then you rebound and then coming back down. So auto matter maybe still a good one to buy too, given that you really showing the materiality of AI and how actually be able to make profit out of it. So I'm still looking for Microsoft right now is at a good buying point, and if you rebound and going back up, you should be around $470, which will give you about $50, 11%, 12% upward opportunity, hopefully in next quarter, which is probably, less than 3 months. So think about it, if less than 3 months, you're going to make 12% to 15% Microsoft, which are sure a pretty good return. The next one we'll talk about is Netflix. Right now, this stock is very disappointing. You actually last week reaching 52-week low at 79.22, and then start rebounding. Again, I look forward for this company to be able to buy Warner Brothers. So again, this will be very good for the stock in the long run. So I hope that right now is a good buying point, but again, this stock may have to think and hold a bit of time before you coming back up again. But if you remember that this stock actually before the split really a push up to $110, which is 1100 from where they were at 700. If you look at probably 2 years timeline, I mean Netflix at one point you were only really dropped down to 200 some dollars when Wall Street say this stock is hopeless, right? But all of a sudden up to 1100, which are really 4 times plus return within a year and a half. So it's very difficult this type of stock to really analyze and evaluate from a fundamental standpoint, but maybe actually make more sense from a technical perspective and also ongoing future aspect of the business. So again, I hope Netflix CEO hear me that while we spy Warner Brothers is really a great move, I think the stock really need to think through the story of Amazon, the story of a lot of other company that they start diversifying is not only focused on the major product that they selling and starting the business with, which is in this case would be video filming. Even though I know there's a lot of diversification, you got now movie everywhere for Netflix from Philippines, China, or whatnot, Thailand, Vietnam. But you still have to remember that at the end of the day, this is still just a video business. So it's important to have a really solid cash to focus on future, which is AI business, cloud business, and maybe get into the EV business. Who knows, right? Something that actually will have a really great potential. While cash is the king, that is always good for investment. And last one, I want to also mention about Under Armour. For those who watched my video a month ago or so, I mean the stock at the time is about $5. So you've now at one point, you was actually reaching $7.80. It's just a high end. So if you do the math real quick, then $2 by $55, it gives you 40% return in this stock within 2 months, which is really, really fantastic, right? And for those who actually listen to my video, I mean, if you will have a buy, if you will have bought TMLC or USAR on the day, the last video that I had on actually the previous when you were bought at that point, you actually will make 100% return. So again, there's some speculative element on these stocks, but I am I'm giving you the timing and I tell you when and what to buy, right? So again, if anybody interested, just trying to listen to and follow up my previous older videos, you know how my portfolio and my investment structure strategy is very different than the institutional investors. Big banking institution tells you how to invest because a lot of them, what they do is basically they use a lot of money, and because they have a lot of money, they're going to be the winner, right? It's why really a no-brainer investment, which is very you can say very stable, right? I mean, on the long run, if you do 20 years of evaluation, taking away the average, you probably get about 12 to 15% return a year. But in any particular stock that I told you to be invested, you go back to look and calculate your rate of return, especially for those one for short term. My rule of thumb is only 20%, so you should at least probably make 20% in the terms of short term investment. Again, any questions you have, feel free to email to me. I hope you enjoy my video, and in next couple of weeks, it's still going to be very strong momentum that will reaching out, and hopefully Microsoft, robots, and this stuff that I mentioned, we're really going to be really fantastic on next quarter. Thank you.